Has the rupee been falling in recent years, or is the dollar getting stronger? These questions seem similar, but they are different. You might wonder why the US dollar got stronger when there was high inflation in the US. Shouldn't high inflation weaken a currency? In normal circumstances, it does. Between 2004 and 2014, the situation was different. The Indian Rupee experienced a significant depreciation against major currencies. In the period from 2014 to 2024, the Indian Rupee has shown remarkable stability compared to other major currencies. However, against the Japanese yen and the Australian dollar, the rupee actually grew stronger. Also, the rupee has strengthened significantly against the Brazilian real and against the Russian ruble. The rupee has either remained stable or become stronger against the major currencies, except the US dollar. This is what I mean by saying that the dollar getting stronger and not the rupee getting weaker. The US borrows only in dollars, and only the US can print more dollars. But countries like India often borrow in foreign currencies, primarily in US dollar. A strong currency can also be risky. For example, it can hurt local businesses. Hello people, I am Suraj Deo and welcome back to Deo Talks. Today we are discussing a very interesting topic, that is how the Indian Rupee has shown remarkable stability in the last 10 years when compared to all major currencies. Yes, that's true. Stay with me till the end of this video and you will understand everything about the performance of the rupee, USD, Euro, British Pound, Chinese Yuan and other major currencies. We will divide the discussion into 4 parts for easy understanding. Part 1. Context of the Indian Rupee and USD. Part 2. Indian Rupee versus major currencies in the last 10 years, that is from 2014 to 2024. Part 3. Currencies performance between 2004 and 2014. And Part 4. Factors affecting a country's exchange rates. Part 1. Context of the Indian Rupee and USD. Today 1 USD equals 83 Indian Rupees. 10 years back in March 2014, it was approx 60. So has the rupee been falling in recent years, or is the dollar getting stronger? These questions seem similar, but they are different. While the rupee's value against the US dollars has decreased, its value against other major currencies such as the Euro, British Pound or Chinese Yuan has remained relatively stable over the same period. If the rupee were truly falling, its value would decrease against most major currencies. However, what we are seeing is that it's the US dollar that has become stronger compared to all others. We will discuss each of the currencies in this video. First, let us understand currency strength and its impact. Currency strength is a critical factor in a country's economic health and global standing. A strong currency reflects confidence in the economy. It attracts foreign investors and allows citizens to purchase goods from other countries at lower prices, thus improving their standard of living. However, a strong currency can also be risky. For example, it can hurt local businesses. Imagine you make products and export them to other countries. If your currency is too strong, your products become more expensive in those countries and you might lose those foreign customers. So your products will be less competitive in the global market, possibly leading to a decline in manufacturing and loss of jobs. Therefore, it's important to find a balance. We need a strong currency but not too strong. We need to keep both imports and exports healthy to maintain a stable economy. In India, we often view the value of the rupee as a matter of national pride and as a symbol of healthy economy. However, despite India's growth from the 10th largest economy in 2014 to the 5th largest in 2023, the rupee has not always mirrored this growth when compared with USD. The answer lies partly in the actions of the US Federal Reserve. As the issuer of the world's dominant currency, the US dollar, the Federal Reserve's decisions have a profound impact on global markets. During the pandemic, the US printed a lot of money to keep its economy afloat. This led to high inflation, the highest in 40 years. To tackle this, the US Federal Reserve raised interest rates, which made the US dollar stronger. You might wonder why the US dollar got stronger when there was high inflation in the US. Shouldn't high inflation weaken a currency? In normal circumstances, it does. But the US has been a superpower for a long time, and its economy is so big that it doesn't always follow the usual rules. When things get tough, many people around the world turn to the US dollar as a safe haven. This demand makes the dollar stronger even when there's high inflation. Think about it. The US dollar is the most widely accepted, most powerful currency in the world. If an investor can get a high return on their money in dollars, why would they go anywhere else? When the Federal Reserve raised interest rates, it made holding assets in US dollars more appealing. In 2014, the Federal Reserve's interest rate was a mere 0.1% or even lower. By 2023, the rate had increased to 5.3%. This substantial increase in US interest rates made investing in dollars more appealing to investors worldwide. Again, this is the same concept. That is why take the risk of investing in other currencies when the dollar offers such lucrative returns. This increased demand for dollars relative to other currencies, including the rupee, led to a depreciation of the rupee against the dollar. Part 2. Indian rupees versus major currencies in the last 10 years, that is from 2014 to 2024. In the period from 2014 to 2024, the Indian rupee has shown remarkable stability compared to other major currencies. For instance, against the euro, it moved from 85 in March 2014 to 89 in March 2024, indicating a modest change. Similarly, against the British pound, the rupee moved from 102 to 104. And against the Canadian dollar, it moved from 55 to 61 rupees over the same period of 10 years. The Chinese Yuan saw a change from 10 to 11 INR. However, against the Japanese yen and the Australian dollar, the rupee actually grew stronger. The Japanese yen decreased from 0.59 rupees to 0.55 rupees, and the Australian dollar decreased from 55 rupees to 54 rupees. Also, the rupee has strengthened significantly against the Brazilian real, rising by about 39%, and against the Russian ruble by 47%. As you can see, the rupee has either remained stable or become stronger against the major currencies, except the US dollar. This is what I mean by saying that the dollar getting stronger and not the rupee getting weaker. One small request before we move further. If you have found this information useful so far, please like this video and subscribe to our community. Your support means a lot. Part 3. Currencies performance between 2004 and 2014. Between 2004 and 2014, the situation was different. The Indian rupee experienced a significant depreciation against major currencies, including the US dollar, euro, British pound, Japanese yen, and Chinese yuan. Several factors contributed to this depreciation. One major factor was the 2008 financial crisis and subsequent global economic slowdown, which impacted India's exports and widened the trade deficit. This increased the demand for foreign currency to finance imports by India, putting downward pressure on the INR. Additionally, rising oil prices and inflation played a significant role in this depreciation. And then of course there was inadequate government responses towards these issues. Here's a comparison of the INR depreciation against major currencies between 2004 and 2014. In 2004, 1 USD was approximately equal to Rs 45. By 2014, it had risen to nearly 60, indicating a depreciation of over 33% in the INR. 1 euro was worth around Rs 53 in 2004, and by 2014, it had reached to Rs 85, reflecting a depreciation of around 60% in the INR. 1 British pound was worth around Rs 70 in 2004, and by 2014 it had climbed to Rs 102, representing a depreciation of over 45% in the INR. Similarly, the rupee also depreciated against the Chinese yuan and the Japanese yen during this period. So you can see that the Indian rupee depreciated against all the major currencies during this period, unlike the last decade. From our discussion till now, it might seem like that the US dollar always manages to come out on top. And in many ways it does. When the US economy is strong, the dollar strengthens. When it's weak, the US creates a wave of panic across the world. Out of fear, the world rushes to the safety of the dollar, making it even stronger. This might not seem fair, but that's the reality of the global financial system. Also, the US does not need to worry much about paying back its own debt, because the US borrows only in dollars, and only the US can print more dollars. But countries like India often borrow in foreign currencies, primarily in US dollar. This exposes them to risk from fluctuations in the value of their own currency, like the rupee. But India is rising again. As the world's 5th largest economy and one of the fastest growing, India is determined to become the 3rd largest economy soon. This new India and Indian rupee will surely reclaim its place on the global stage. Part 4. Factors affecting exchange rates. For example, USD to INR rate. Number 1. Trade balances. A country's trade balance is the difference between the value of its exports, that is goods and services sold to other countries, and imports, that is goods and services bought from other countries. A country's trade balance can impact its currency value. A trade surplus, which means more exports than imports, can strengthen the currency, while a trade deficit can weaken it. For example, if India exports more goods and services to the US than it imports from US, it creates a demand for the Indian rupee, leading to a stronger INR against the US dollar. Number 2. Inflation. High inflation rates can eat away the purchasing power of a currency, leading to depreciation. For instance, if the inflation rate in India is higher than in the USA, the value of the INR may depreciate against the USD, making imports more expensive for India. Number 3. Interest rates. Higher interest rates in a country make its economy more attractive to foreign investors. Interest rates are the cost of borrowing money. They are set by central banks like RBI or Reserve Bank of India. If India offers higher interest rates compared to the US, it becomes more attractive for foreign investors to park their money in assets in the Indian Rupee. For example, if RBI raises interest rates, it can attract foreign investment, increasing the demand for INR and strengthening its value against the USD. Number 4. Geopolitical events. Political stability and international relations can influence investor confidence and currency value. Uncertain events like wars, trade disputes, or political unrest can cause investors to flee to safe haven currencies like the US dollar, thereby weakening the local currency. Number 5. Foreign direct investment or FDI. FDI refers to investment made by a company from one country into a business in another country. It brings in foreign capital and can boost economic growth. A country's attractiveness for foreign investment can impact its currency. Higher rates of FDI can strengthen the currency, while lower FDI can weaken it. For example, if India attracts a significant amount of FDI, it can lead to an increased demand for INR, strengthening its value against the USD. There are other factors. For instance, high levels of government debt can lead to concerns about a country's ability to repay its debt, which can weaken the currency. Similarly, economic indicators such as GDP growth rate, employment data, and consumer confidence can impact exchange rates. Positive economic data can strengthen a currency, while negative data can weaken it. So all these factors work together to determine exchange rates, and knowing them can help people and businesses make smart decisions about foreign exchange and foreign businesses. That's all for now. Please feel free to leave any question or comments below. Thanks a lot for your time, and let's take care of this beautiful world. I'll see you next. And smile. Always smile.